let's take a look at a couple of dumpster fires. This, guys, I sent this to a developer because I said, hey, what's your take on this? Happy Saturday, everybody. I hope you all are having a great weekend. Prices appear to have peaked for the year. Now, this is much earlier than last year, which begs the question, are they going to tank? Well, I'm going to let you decide using the data that I have because, when I forecast, it's almost guaranteed to be wrong. So the best thing I can do is just show you the data, show you what's happening, and then let you decide what you think will happen. Now, if you don't know me, my name's Ethan Flynn. I'm a data junkie who helps people buy and sell real estate in Nashville. I use data to provide value hacks and insight into the market so you can get a better than average outcome for the market that we're in. Let's take a look at a couple of dumpster fires. This is City Bluffs. Let me just zoom out a little bit. This is just north of Nashville, right off the Cumberland River here. And, you have Oracle coming in right over here somewhere. I don't know exactly where off the Cumberland. So this is pretty close to Oracle off the West Trinity Lane. And it's a new development started in 2022. And you can see, let's just zoom in on this one, 625 sold on September 1st, 2023. Now, the truth is, this is so bad, guy. I actually feel terrible. They were under contract in April of 2022. This was peak market. They went under contract. They closed at 625. All of these were under contract, and it appears that 3 fell out of contract, and now they got listed for 439. Okay, so we went from 625, a closing in September, to 439, something that just went under contract just a couple weeks ago. And 439, they tried to list it for 465, got zero traction. Then they listed it for 439 and they got it under contract. Guys, that is from 625 to 439. That's a 30% drop in price the comps, less than a year. That to me is bad news. Now I sent this to the developer and I just said, hey, what's your take? His response, buckle up. It doesn't matter where you're buying. You do need to pay attention. I would never, ever, ever recommend trying to outbid or overbid list price and getting into bidding competition. Almost every loss that I see made that mistake. Almost every single home sale loss made the mistake of trying to overbid somebody else and bidding up from the list price. Don't get into a bidding competition. That's one of the easiest things you can do to protect yourself. Now here we're in Franklin, just south of Franklin, just south of Goose Creek bypass here. And there's a neighborhood, Stream Valley, and we have a listing here for $885. Now this was a Ryan built home in 2015. It's got an assumable mortgage on it. And here's the problem though. Even though it has an assumable mortgage, look at these down here. These are Ryan built homes too. Look at the square footage, 2,750. Let me show you this. Rare quick move-in in Stream Valley. Okay, this is almost ready to go. It says completion in early June. It may be ready. It says it's complete on 6/6. I don't know if it's ready or not, but here's the point. Brand new, 2,750 square feet, 4-bed, 3-bath. I had someone on my team tour this one with another buyer, and they looked at it and they were questioning, why in the world would I pay $885 for this house when I can get a brand new house, by the way, with some concessions on, you've got 6% in builder, whatever, cash discounts. Who knows even what that means. But point is they're going to give you some incentives. So you got some incentives and you can pay $150,000 less. Guys, you know that I'm a fan of assumable mortgages, but the math has to make sense. The only way this makes sense to buy is if you got it for $750, right? It's got to drop 6 figures. It's got to drop because it's a 10-year-old house. This house is 10 years older than these brand new houses. You've got to get this to $750 and assume the mortgage, and then it's a good deal. So it doesn't just because you can assume a mortgage doesn't mean it's a good deal. All right. Now, if you're not sure, if you're like, well, I don't know if I'm about to assume and it's a good deal, one of the best protections that you can do, this is a high level, I'm just going to try to protect myself, is just look at what houses in the area rent for. Okay. And we can see this is 3,500 square feet. It went for $4,000 a month. These are going for $3,700 a month. I think that's probably the most realistic number is somewhere between 3,500 and 3,700. Because remember, this is a 2,500 square foot house. So let's just assume that you can get $3,500 a month for that house that's $800,000. $800,000. $800,000, y'all. I don't even know what the mortgage is on that. $800,000 with a 20% down. I got to do the math on it. Hang on. 885 at a 7% interest. Can you believe it? 7%. Let's do 20% down. Annual insurance, what, $1,800 a month. Annual taxes, $2,800. Can you believe that? $2,800 in tax. That's so cheap. All right. I don't know what the HOA fee is. Does it say? We're going to get an exact here. $70 a month. Okay, so 70. $5,200 is your monthly payment. If you assume the mortgage, your payment's going to be $2,700 a month. Okay, so obviously, assuming the mortgage is the way to go. The problem is the opportunity cost you have and the $400,000 you would have to do to buy down on this, $1,700 in opportunity cost. Okay, so look, I'm just saying it still doesn't make sense to buy this, even with the assumable. Your comps are going to absolutely destroy you. So you're not going to have equity. You are going to have equity because you're going to put $400,000 down, but you're going to have a loss in home value instantly. This home is not worth $885. It's worth probably realistically low 700s, in my opinion. There's no way. I mean, I don't know. You guys tell me. Tell me if I'm wrong. I'm happy to be wrong. This was posted on Twitter. It says, it looks to me like Nashville prices have peaked for the year. The gap between contract price and sales price is starting to break. This is likely due to price concessions in the contract. What do you think? Have we peaked? Now, so that orange line right there is contract price. Now, if you push contract price out 30 days, you can actually use it as a leading indicator, and it's remarkably close to what is actually happening with the median sales price, which is the blue line. I kind of felt bad about this post, and here's why. I made a conjecture in this that was easily checkable. Look at this. The gap between contract price and sales price is starting to break. This is likely due to price concessions in the contracts. Now, if you think about that, it's pretty easy if you have the data to decide whether or not it's due to price concessions. So after I posted this, I kind of felt bad, and I was like, I just need to measure it and figure out if it really is concessions. And this led me to one of the most wild discoveries I have made in data. In fact, it's one of the best leading indicators. And I just didn't realize Altos has been talking about price cuts. But what I didn't realize is just how strong these price cuts can show you where the market is headed. Now, what you're looking at here, the blue line is concessions, okay? And the orange line is price cuts. Now, just real quick brief, let me brief you really quick on the difference between price cuts and concessions, okay? A price cut is where it's an active listing that they drop their price and now it's $900,000 instead of $1 million, but it's still active. Okay, that's a price cut. A concession is where the list price is $900,000, but when you close at $850,000. Okay, that was a $50,000 concession. Now, it's really important to distinguish these two because what I'm about to show you is absolutely mind-blowing. And that is the correlation between price cuts and concessions. Look at this. Okay, that orange line shows you the percentage of listings that have cut their price. The blue line shows you the percentage of listings that closed at a lower price than list price. Okay, so think about this for a second. If you close at a lower price than list price, that means that you cut your price again. So the idea here is that when price cuts start accelerating, so do concessions. And that is really wild because, again, if you look at this, this is concession, this is price cut. Basically, the more price cuts you have, the more concessions you have. If someone dropped their price, they're more likely to drop their price again to get it sold. And that's what we're seeing, a very, very strong correlation. Okay, so what does this mean and why are these two charts related? Okay, if we think that there's a gap between median sales price and median contract, and that gap is caused because of concessions, then it truly has peaked for the year. Now, the truth is that we're not seeing that in the data yet. It appears to me that concessions continue to be at kind of an annual low of about 42.7%. We can see that's about where it troughed last year. But we can also see that price cuts have begun skyrocketing. And when we move price cuts out about 90 days, where this orange line is, it's pushed out 90 days, we can see where concessions are heading next. Concessions are heading up. And so I believe in the next 4 to 8 weeks, we're going to start seeing many, many more concessions. Why? Because we're already seeing the price cuts, and that is a leading indicator that people are cutting their price and they're willing to take an even further price drop to get their house sold. Now, anecdotally, I've seen this twice this week. I had 2 sellers that had dropped their price, and when we talked to them, they were willing to go even more to get that property sold. And that's what's so powerful. That's what's so powerful. If you're willing to cut your price, you're willing to cut it even more. This is very exciting. This makes me think that when price cuts start accelerating up, you have a real opportunity in the market. You can see we troughed at 27, really below 27 this year. I should have put that number on the map. I don't know what it is, but now we're starting to see it accelerate up. We're at 32.7%. This has been moving up. It's been inching up every week for the past 4 to 6 weeks. Okay. Now we'll see if it continues to inch up, but if it does, it's an obvious leading indicator that not only are price cuts happening, but concessions are going to start happening. Pretty exciting if you ask me, and an indicator, in my opinion, that prices have peaked for the year. The other reason I think that is because our active listings are high. Active listings peaked last year at about 6458. We have already blown through that, and now in the first week of June, we are above our previous May high, and this kind of growth, if it continues, we're going to be much, much higher in all of Middle Tennessee. It's very powerful, and it signifies that things are changing in this market. Price cuts are increasing, concessions are increasing, and you have more to choose from. So there's seller competition. When we look at by county, look at Rutherford County. Rutherford County is getting ready to break above its November high, and you can see from where it was last year at this time, it's been skyrocketing. Now, I mentioned in a previous video that the Rutherford County discounts or price cuts have been very low, but given the number of the increase in active listings, you wonder just how long that's going to last. Williamson, on the other hand, continues to be the strongest county that there is, okay? You can see we actually peaked in May 18th, and the inventory's kind of managed itself since then. No new peak since May 18th, which is really unusual for not just Williamson County, but for any county, and for the trend that we're seeing in greater Nashville. So Williamson continues to be strong, continues to appear to manage its own inventory to keep it balanced. And again, I noticed this in the past couple of weeks, people holding out on listing properties that they knew they were going to list, because I found some off markets. I had a buyer who was looking in a neighborhood, and so I started reaching out to find if there were any off markets in that neighborhood, and I found several listings of people that were waiting to put their house on the market. And so there is a little bit of management of inventory here in Williamson County. Now in Davidson's kind of flat to where it was last week. But again, I mean, this is uncharted territory. We're in much, much higher than we were. We're over 100 listings higher, or almost 100 listings higher than we peaked last year. Murray's having some trouble, but again, it's not back to its previous May high. Nonetheless, there's a lot of inventory in Murray that's sitting and having a hard time selling. Okay, let's take a look at Wilson. Wilson continues to be one of the strongest counties too. Wilson and Sumner have been impressively strong. Here we can see active listings continue to go up, but we've also had strong contracts with that. So it doesn't appear to me to be a red flag, although I did have some people reach out and they're like, well, there's some soft spots in Wilson. There's soft spots in every single county, but in general, we are seeing some strength in Wilson and even Sumner. You can see Sumner is managing its inventory. So all in all, we can see that we're higher, even though we're higher from last week and the previous May high. Each county doesn't necessarily have higher active listings. Kind of interesting. That's all I have for today. I appreciate you watching, and I look forward to seeing you next Saturday.